Hi, everyone. Welcome to another episode of Target Practice, a podcast about great managers, interesting data, and important decisions. I'm Amir Konigsberg, CEO of Target Board AI, and today I have with me Amir Konigsberg, who's a repeat co-founder and a longtime friend. Amir, it's really great having you here.
It's great to be here, Leo. Thank you. It's always fun to chat.
So, Amir, you've done some crazy things in your career, some very impressive companies such as Twiggle and My Supermarket. What was your most meaningful accomplishment?
I'm going to think for a second there. I mean, I thought you were going to say you've done some pretty stupid things along your career. And then it would be very easy to say what those were because there are so many. But the most meaningful was, I think the honest truth is, it sounds a bit cliche when I say it, but the most meaningful thing was to bring together the people who ended up working on these projects, building these companies and having them in one space, in one place together and actually trying to do crazy things. Sometimes actually those things happen. Sometimes we fail to do them, but the most meaningful thing was looking back is really putting together teams, excellent teams that are able to take things from 0 to 1 and beyond.
But if you had to put a spotlight on like one accomplishment, what was one moment where you said, wow, I did something here?
I think weirdly, I think it was the first time we raised kind of serious venture capital money at Twiggle with a demo that we had built, which had knocked some of the leading companies and venture capital investors in the world off their seats by how impressive it was. And then immediately we got into a competitive situation between investors and potential buyers. I was very proud not of that, but of actually having built something in such a short time that really got across the concept and the potential of what we were building. So I remember that as a really meaningful moment.
I remember Twiggle was very much ahead of its time. It was a very cool product.
It was kind of, when we imagined it, I think very much like the type of interaction that you have today with like ChatGPT or with Claude, like a question answer type dialogue.
Yep. Do you want to say a few words on, because people probably don't remember or know what Twiggle did. You want to say a few words for context?
Yeah. So Twiggle was a company. We looked at what we did as a semantic search engine. So a search engine that was able to struct, information at very, very large scales, understand that information, and then match it really, really well to the user search queries, the user requests. So it basically gave you a much better experience when you search for something. You found better results. You could articulate what you wanted in a much better way because you can get into details about specifications of the type of product you need. If you want a phone, you could specify whether you wanted it to be waterproof, big or small and stuff, and it would match you to the exact product that you needed. So that was the core of the company.
Essentially AI-based conversational commerce that worked pretty well 10 years ago.
Yeah, you're absolutely right. We imagined ourselves as helping computers understand people better, but you're right. That's what it was. It was primarily focused on large e-commerce enterprises. So the likes of Walmart and Levi's and Alibaba and basically all the competitors around Amazon that were serious, like 1 billion plus businesses in terms of turnover a year.
Very cool. Next question. Throughout this long path that had like big ups and downs, what is like one moment where you said, this isn't working like I planned to, or, I don't want to use the word regret, but something you would do different if you had to do it again?
I actually think that that slip of tongue with the word regret is actually important because I don't think I regret anything, because I think one thing I regret is not taking more time to listen to myself in certain situations. And I think I'll have to give 2 examples, if that's okay. 2 of them relate to listening to. They relate to something which I think is a very tricky area for an entrepreneur and for a founder. It's both of them. The first situation was, I think, My Supermarket, where we were in it together. which was an incredible company. And the second was with Twiggle as well. Both of them had to do with, I think, selling a product that we had built and invested a lot of time into enterprise customers. And both of them, each in its own way, were about, on the one hand, having very, very high conviction in the value that we were giving to our customers. And on the other hand, having reality tell us that maybe they're not ready, maybe this will just take a little while longer. And over time, it became clear, each in its own way, that the market was actually saying no, or it was saying you need to completely change this offering. I mean, I remember a fantastic product that you actually built. I remember seeing it for the first time, and it was actually it was showing, and this was around 2008 or 9. I can't remember maybe a bit before. It was showing price elasticity, the difference between supply and demand at the SKU level. And we were trying to sell that kind of data to market research companies, which is incredible data. And we were convinced how valuable it was, but it took us time to understand, for instance, that the industry wasn't actually after that specific kind of data. And we had the same at Twiggle as well, where we were convinced that, large enterprises needed an API to help their search become better. And they did actually need that, but the way they needed that was different. So these are two moments when I don't know if there's anything to regret in that sense, but I would have listened differently if I would be going back in time.
Now, do you recall a situation where having the right data would have made a big impact on a decision you made and you didn't have that data?
Yes. So I want to tell you, I mean, there was a company, it was a company, basically what we did was we did static code analysis for any company using Salesforce. A company called CodeScan. We ended up selling it to a company called AutoRabbit in 2021 or 22. And basically we had a situation where we were already in a process where it was a bootstrap company, got to about 150 customers. They were basically paying per lines of code on something which was pretty much self-sustaining, a very, very small team. And we decided we either raise funds and build something a lot bigger to move beyond static code analysis, to move beyond select clients in the Salesforce ecosystem and go for everyone. And then we raise a large round, or we sell the company, or we look for an acquirer out of one of our customers maybe. The problem was we consulted bankers what to do back then, what kind of value we thought we would get for it. And the problem was our churn. It was way too high. We weren't that bothered because the company itself, again, it was very profitable. So, I mean, everything looked okay. We weren't investing that much time in looking at that. But we didn't actually, for quite a while when we were adjusting our deck to give to the banker to look, I mean, we were trying to figure out why there is such I think it was around more than 20%. And that had a very significant impact on the type of deals we could get and the type of value we could get. And we just didn't know why that was happening. And again, the application was lines of code with specific rules in them, detecting all kinds of bugs basically in the Salesforce system. It wasn't complicated. It took a while. We actually had to at some point we figured out that literally no one had spoken to any of the customers beyond the top. By then, there were about 220 customers. No one had spoken to anyone other than those that were kind of bringing in the largest deals, because the incentive structure, as it we ended up finding out, was completely wrong. On the sales side, they weren't managed properly. But basically, within about a year, we solved this simply by putting in place a very simple rule, basically for the customer success folks that are doing customer success, to make sure that they check in at least once a month. That's it. Literally an email, a phone call, a small meeting. Is there anything you need? Can we do anything for you? Most of the time the answer was no. But within about a year, we had reduced the churn to about, I think between it was 7 to 10%. And that completely changed the dynamics. And we didn't have that gap. And that was really important. There are probably many other cases as well, but that came to mind.
It's a great story. You're writing a lot of articles about the impact
Yeah.
of AI on society. What are you most excited about or concerned about, for that matter?
I'm a bit more concerned than excited. I've been excited about AI ever since I started my career. That's what driven me to do, that's what drove me to do every single piece of work I've done. I've been lucky enough to really follow that excitement. The whole interface between, human psychology, human cognition, and information technology is been something that's been so interesting for me since search engines up until now. But I never imagined it when I was building like previous companies that were aiming to do natural language processing, natural language understanding. I never imagined the experience would be as powerful as it is today. I didn't, when I used to imagine, all the discussions about the Turing test and watching films like Her, when they showed I didn't imagine that experience to be what it's like today, which is so on the one hand, it feels creative, it feels empowering, it feels, you can literally, you don't need anyone to play around with ideas. And if you're someone like me, like us, it's like a playground to you. It's like the closest thing that I've had to going on the swings as a kid, that's what I love about it. What I am very, very concerned about is the gap in how experts or how people who build AI look at AI and understand the way it works. And then there's most of the people who use it, because what I'm concerned about is the type of things that it's being used for. I'm not talking about the really big dramas and big scary things like military technology and surveillance and attack surfaces. These are scary things, but they're different. I'm talking about I'm concerned about the subtle things, about losing certain cognitive capabilities and critical capabilities and agency over your own way of doing things. I'm concerned about that because it comes together with the excitement, right? You're basically using an extension to do a lot of your thinking for you, which is amazing, but it's also quite concerning. We've heard of cases where there have been kids that have been talking intimate dialogues to chatbots.
Okay, last question.
Yes.
Based on your experience, what would be a recommendation for one metric to track for new founders building AI first companies?
Definitely churn. I think churn is important because that's where you get the information. And I think there are many things that people will buy into because today especially now with the explosion in terms of the number of new services coming out. I've signed up, I think in the last month alone, to about 7 different things. I counted yesterday. I don't know if I'm going to continue using them next month. And that's what I'm worried about. That's why I think the one thing I would look at is churn. A lot more than new business.
I agree. I think that, it's building is so much easier, but the churn is where you really learn if you're adding the value and if you have market fit and what the gaps are.
Absolutely.
It's where your vision and your dreams and, the story you're selling matches up with the reality.
Absolutely. By the way, question to you. Can I ask you a question? What do you, in that situation, just to follow up on that, how do you look at churn today? I'm asking that in a world with more and more less and less touch between people when they sign up, unless this is like a, hundreds of thousands of dollars enterprise deal or millions of dollars enterprise deal. In many cases, you don't interact. So how do you look at churn in that kind of world?
So in our world, we interact heavily with all our customers. And I think that has pros and it has cons. Specifically, the way we analyze churn is classifying it if it was, why did somebody leave? Did we do everything right to keep them happy, to keep them engaged? Is it an execution problem? Is it an expectation problem? Is it a budget problem? Is it a market fit problem? And we learned a lot. We learned, that some customers were too small to see value in what we're offering. We learned that some areas we had to manage the account better. That we might have been too focused on a specific champion. They over time might change roles or leave, or in a big account they might not have visibility into everything else happening in the account, and you could get sidelined. So I think each one is an opportunity to learn and hopefully not to make the same mistakes again.
No, it's good. It makes me feel good that this is a world I'm familiar with still. What's happening now is very new, so exciting to see what's going to happen.
The more things change, the more they stay the same. So that's been our episodes for today. Thank you all for joining. If you liked it, please rate and review. Amir, thank you so much for coming, and I hope to see you next time.
Thank you for having me. It's been fun. Thank you.
Likewise.
Bye. Bye, Leo.